Alright everybody, welcome back to a brand new video on the channel, and pretty much today I'm going to be studying some price action and what I noticed as price played out. So the very first thing that we're going to do, alright, I analyzed the Thursday the 9th of March 2023. That's where we're going to be starting, and I finally today found out that because I'm paying for Pro I can have the dual pane. I could have more if I paid for more, but it's neither here nor there. So we're just gonna be analyzing this, price sample, and we're gonna essentially, I'm gonna go through my whole thought process of what I thought before it had happened. Okay. So give me 1 second here. Okay. This is the weekly. Okay. So right now, where am I expecting the weekly candle to go? Okay. Firstly, this buy side liquidity has been taken right here. If we're looking at the weekly time frame, okay, we now have these relative equal highs, but this is a stop rate, and any time a significant move lower or higher is expected, you can expect some form or measure of a stop rate. Okay, so we saw that here, and then we see this significant move lower. All right, and where will the weekly candle go, or where is it likely to go? And from my analysis, it's going to continue to take out this level of sell side. Okay. Now, Rand, this candle that we see moving here, at the time of recording this, this is Sunday at 6:26 p.m. Eastern Standard. So this candle's already moving. But I believe that the candle is, for the week, is going to end being a red candle. Okay. Now, right now, where it's currently at, it's actually trading into an inefficiency. All right, but we've already moved to a premium, so now I'm expecting it to move into a discount. And where exactly am I expecting to move to? This level of sell side liquidity right here. Expect by the end of the week it'll reach that level of sell side liquidity, and then from there we're gonna go ahead and hop onto the 1 day time frame, and I'm gonna further my analysis of that. So let's see where we are currently in the week, and why am I saying that that weekly candle is going to continue lower. Well, we see the same things transposed onto the daily time frame, this buy side liquidity and these relative equal highs that are left here. Okay, now we do have multiple inefficient price deliveries, fair value gap, okay, and we have this breaking structure here, which we'll go over in just a minute, but we have this sell side liquidity that was taken. So is it right to expect some form of retracement now that we've had a raid on these stops? That's right. What I would expect, or what I'd like to see price do, is I would like to see price move to this inefficient price delivery right here on the daily. Okay, I'd expect price to trade back into that as it is now. In fact, the low of the fair value gap, you can't really see it. This is the 3 minutes, so everything's refined, but the low of the fair value gap is about here at 3945. We just say like 39. We can just say 3950. Or no, sorry. No, we'll say 3945. Just about. And that's the low of the fair value gap. So I'm expecting that to be retraded before we continue to see price move towards sell side. All right, and this is more of things that we're talking about. What am I expecting for the next week, or we're essentially at the beginning of the trading week. So these are more of my expectations for the beginning of the trading week. As far as where we are in price right now, I'm expecting lower prices. So in other words, my bias for the week is that we're bearish. Okay, and the levels I outlined are the reason behind that. And the reason I believe price is going to go lower is because we've already traded to a premium, and we're now seeing price trade into a discount. Yes, this level of sell side liquidity was taken, but we have yet to take these levels of sell side that are outlined on the weekly, and as we know, price is fractal. Okay, so enough rambling about that. The price action study that I had was for this large candle where the break in structure happened. Okay, so we had this low here that was created, and we did have a stop rate on that low previously. Oh, shoot. Give me 1 second here. Okay, but regardless, Okay, this old low was taken out on Thursday. And Thursday was a very bearish day. This day is not Thursday. This is the price action I was looking at Friday. This day right here is actually Thursday. This is Thursday's price action, okay? And so here's that daily candle transposed. All right. So my thing was on Thursday. I'm gonna dive into it here, but I didn't really see a lot of worthy price action, and I'm gonna keep this up. This is the daily time frame. I'm gonna keep that up on the left side, and I'm gonna do a majority of my analysis and what I saw happen here on the right side of the screen. Okay. So the very first thing, all right, when we opened the day previous, okay, was this consolidation candle or this indecisive candle where it didn't really make any moves towards buy side or sell side. Now, what it did create was a high of the day and low of the day. And at the start of the day, the very first thing it did was actually take this level of buy side liquidity right here, okay? And you can see that if you look at the cursor, okay, you can see that that level of buy side liquidity from the prior day was taken at the start of the day, actually around equities open. Okay, we have that level of liquidity that was taken, and at 8:30, okay, we had some manipulation or at least volatility in the market with the unemployment claims. Okay, so the very first thing here, I marked this old high, okay, as a previous level of buy side, and the reason I marked that level is because it was the London high. Okay, it was a high of London that was created at 2 a.m. in the London session, and then I marked the London low here for sell side. All right, so let's go ahead and let's start from the 15-minute, just so I can really provide some clarity on what I saw in this example of price action that I studied. Okay, here I'm just going to use the magnifying glass real quick, and I'm going to explain exactly what I saw as it happened. Okay. So I had these lows marked before price started trading. Now operating hours are marked by these. I'm simplifying a lot of stuff to make this a lot more clear for me. And one of those things I'm going to do to kind of streamline this process is to mark the operating hours with simple red and green lines. As if, you know, like a stoplight, right? Start, stop, and yield. And the yellow is essentially just indicating the equities open or the liquidity that will be placed within the market then. Okay, red means that you don't trade, that's outside of operating hours, and so on. So I think you guys understand the concept if you know how traffic lights work. But here's exactly what I saw. All right, so at 8:30 open, that's when we see price trade above the London highs. This level of buy side liquidity here at 3992. All right, at 8:30, I viewed price as it continued higher, and obviously with this right here, there was no setups. Now, obviously here on the 15-minute, we're looking for levels of liquidity, okay, and that's where I had marked this level of sell side and buy side. Regardless, we see price continue and we see this stop raid, okay, or this raid on stops here, right? And so right here, nothing is too damning. Now we do have like trades below a short-term low, all right, but a lot of this, and we'll go to the smaller time frames here with these levels outlined, but I didn't really see anything that I liked in the morning price. I'll show you, okay. So let's drop down to the 5-minute and go through even more of it. Okay, so here we are on the 5-minute time frame. Okay, so again, the liquidity injection from 8:30 continues. 9:30 equities open continues and takes out this buy side. Okay, so when this buy side is taken out, when we look here on the left, we see that the indecisive candle, it actually takes the liquidity above the high of Wednesday, and that liquidity is then taken. Okay, now after that, being with our current bias and current objectives, where would I be expecting price to go? All right. I could say that we would be expecting, price to trade up here, right? I could definitely say, oh yeah, I'm expecting price to trade all the way to this previous high. But to me, that makes no sense, okay? There was this fair value gap or this inefficient price delivery, which we, could expect here. But the reason why I wasn't expecting that is just due to the fact that we already had this level of buy side liquidity taken. So I was expecting price to continue moving into a discount. All right, even though we had key levels that I expect to eventually be revisited as this fair value gap was, ultimately what I had seen in price was indication that I was looking for lower prices, okay? And let me, instead of just talking about it, let me also show, okay? So look, right here, I drew my fib from this high to this old low, okay? Now, when we traded up here, okay, we were still in a premium, okay? And granted, price took that liquidity, but we're still in a premium within this range. And of course, I was right because I see a move down there to a discount, okay? So, regardless, now we're here on the 5 minute and we're going to start looking for setups, okay? Based on the levels that I had indicated and based on the time frames. But again, just looking at that buy side liquidity being taken out right here, okay? Paying attention to the 930 equities open where it continues higher, okay? And then creates this high right here. All right, this is actually the high of the day. All right, so soon after, now we would essentially start looking for a position to go short with this bias. Being with what I previously mentioned, being that we're in a premium and that level of liquidity is taken, I begin looking for positions or opportunities to go short. Okay, what we're really looking for is a trade below, okay, an old low, displacement below an old low, okay, with a fair value gap that is retraded. All right, so here on the 5 minute time frame, we kind of see something, okay? We have this candle here. All right, this is a low that was formed, and we have that traded below. But even though this is a larger candle, it's not necessarily an aggressive move lower, okay? Trading off of this idea may have been a stretch, but let's give ourselves some credit as we are still on the 5 minute time frame, okay? And this is also getting pretty close to the end, which can be seen by this candle here. Okay, so our operating hours to 11:30. This is getting a little too close to the end. So with that said, everything here before, there's nothing here. I looked at this, even prior to our operating hours, there's nothing. Okay, we have the unemployment claims. We have this volatility from the 930 equities open that takes the liquidity from this imbalance and also that buy side, okay? And then the fair value gap here acts as a kind of, resistance, if you will. All right. So with that said, I didn't necessarily see anything I liked. I would have liked to have seen this move below this old low be a lot more aggressive. And of course, on this 5 minute, we don't even see any type of like gap in fair value or anything like that. So we're going to go ahead and drop to the 5 minute. And I'm going to continue explaining what I saw here. All right. So here we are. And here's the low that I was talking about, which is so close to the end. And of course, I'm not going to be holding anything during the lunch hour. I would be watching price during the lunch hour, but I wouldn't be holding anything through it, okay? So even with this low, right, that's really not any kind of aggressive movement lower, okay? And it's a little too close to lunch. with this here, right? There's no old high taken out. Like we have this old high taken out with that displacement, but it's not retraded, and that's because of the liquidity in the AM session. So in other words, what I came to realize is, as far as what I'm looking for in this model, low hanging fruit setups, okay? I don't see anything here in the morning that I would have liked to have taken, okay? Of course, we again, and I saw this, okay? We had this high that was taken out, but watching this price play out, okay, I have to understand kind of where we are, and really see if that would have made sense, and it didn't make sense. There's not enough length or room there. And the reason I say that is, as I watch this happen, okay, I'm gonna draw it from the current low, okay, this level of sell side liquidity, to where we are now. Okay, so if I'm looking to place a long position, I am going to want it to be near or below. In other words, I'm going to want to buy in a discount. I'm going to want it to buy it below equilibrium. And obviously, as this played out, you know, we didn't have that entry in the morning because this inefficiency wasn't retraded to in the morning. Okay, we did have that buy side liquidity taken out, and yes, we have this high here with displacement higher, which is retraded. Okay, and then of course it goes past buy side, and this fair value gap here I marked. Let me take this off. I was trying to understand where price was headed. Okay, and the only thing I could come up with was this inefficient price delivery right here, which it then traded above. Okay, however, an entry from this entry from here being where it was at, I didn't feel like it was low hanging fruit. Could it have been a profitable trade? Indeed, it definitely could have, you know, but would it have been necessarily a high probability trade, or would it have been a contrarian trade? Yes, and you know, I just didn't want to trade or think of ideas that were outside the model. Now I did look at that, but I wouldn't have taken it. Okay, same thing here with it being so close to the end of the session. Wouldn't have taken it. All right, so we have all this price action all the way to lunch. Okay, and then lunch we finally have that break in structure. Okay, we have this right here below an old low. Okay, boom, we have that break in structure. And now what we're seeing with this break in structure, okay, this trading below an old low, okay, we're seeing it's nearing closer to the previous day's low. If you look on the right side, look at the dotted line, 3970, that level, okay, that is the previous day's low, and that is where there's liquidity. All right, and if it takes out that low, well, what am I expecting for, you know, the next target? Where would I expect price to deliver next? Where's the next level of liquidity? Well, of course, I didn't know that this where the daily candle was going to go, but I would look at that previous low that was created, and then I see here this break in structure, which is marked clearly, okay, and then also the low from earlier, the London session low, is now taken out. All right, so now in the PM session, we have 1:30 rolls around, and I can start looking for different entries, and based on what I've spectated for price delivery in the morning, and that's exactly what I did. Okay, so I'm gonna go ahead and I'm gonna head over here. All right, and I'm gonna look at what I finally found, or what I finally felt was, in fact, a fair setup or a good entry. Okay, and granted, as a developing student, I'm still working on gaining confidence within these setups, but I want to show what I looked at here. Being that I expect the next level of liquidity to be taken at this previous low here, okay, or this previous low here, I'm expecting price to deliver and take out the sell stops. All right, so here we are. We have that level of liquidity taken. Let's do one other thing here. Bear with me. Oh, sorry. let me do this. This high, this low. And what do you know? Okay, we are, oh, sorry, I meant to this low. Currently, okay, we are now in a discount. So now we are moving into a discount. And so that's pretty much the main backing behind this idea. We've already seen price move into a premium to take that level of buy side liquidity. We now have these levels of, or these sell side objectives I'm expecting price to trade to. And I watch that happen, okay? So the first thing, as soon as we start looking for things, I first notice this low here that's created. And I notice right after 130 that that low is violated. Now, obviously, this is just an idea. I'm looking at this low. I see it violated. So I mark this swing low here. Candle, a higher candle to the left, higher candle to the right. Okay, I mark that down, which is indicated by this arrow. I mark this idea down as I see that break in structure. Does it create a fair value gap? Yes, it does. So I mark that fair value gap. Okay, now when 130 opens, or when we have 130 come around, now I'm watching for that fair value gap to be retraded. Okay, is that fair value gap retraded? Yes, it is. Okay, so soon afterwards, I'm focusing on this low, which I notice. Okay, this is at 139. So granted, this from here, which is 132, to it being retraded 144, that's essentially about 12 minutes. It's about 12 minutes for that to arrive. Okay, then I have this low here. All right, I see displacement below this old low. So it's the same idea. Okay, we have this candle higher to the left, higher to the right. Okay, and we have this low violated, which creates an idea. Is there a fair value gap within this idea? Well, yeah. From the here to here, there's an inefficient price delivery, which is retraded to, and we then see it continues lower. Okay, see it continues lower. All right, now this is still fairly early. Obviously the operating hours go to 16:30. Let me do something real quick. 'Cause I'm terrible with no, sorry, I'm very, and I can't even type. All right, well, hopefully, okay. So actually, that's 5:30. So, because I just changed it, so I was using military time. Now I'm using the normal time. Anyways, operating hours are then till 6:30. Okay. So, anyways, we see price continue to deliver. Okay. Into the sell side. We see it continue to go lower. All right. Now my target here, okay, which was this old low, is here at 3941. I wouldn't have been stopped out. It might have been a little scary when it went up here, but I wouldn't have been stopped out. I would have held my trade to what I was expecting, which was this level of sell side here, and it smacked the target. Now I could have done like a pyramid entry, or I could have closed off some of my positions and then, watched to see if it would have been, gone to this other level of sell side right here, which was at 3912. Okay, so 3912, did it do that in operating hours? Well, let's see here. 3912. Boom, it did. If I would have had a position there, whether it be a small position, if I closed most of my positions off where I was still confident, right here, okay, where I was confident that that was the next objective, okay, I would have already been in a profit. If I would have had a small position at this next level of sell side liquidity, I still would have been in the green, still would have been profitable with that trade, okay, and these were the only setups that I recognized as valid, or I would have been confident for. Now, this indicates the end of the trading day, okay, and or the end of operating hours, sorry. And that's pretty much all I had seen for Thursday. So, to summarize it and make it very simple, to summarize the day, I know I'm being a little redundant, but I'm doing this for me. Me explaining it helps me retain it. Okay. If you don't like it, you don't have to watch this video. I don't know if I don't think anyone watches this. It's literally just for my record. But anyways, what did I see happen, sorry, on Thursday? The very first thing I saw in the AM session was I saw the previous day's high being taken out and that buy side liquidity being taken out when my daily bias was that we were expecting to see lower prices. I had a bearish bias, and the objective behind that was first the previous day's low. In the morning, I didn't see anything I would have liked to have saw or seen that was low-hanging fruit in the morning or during operating hours. I saw a potential setup, but not something that necessarily follows the model. Okay, so in the PM session, I start looking for setups. I notice that we're moving into a discount, and I notice that we have lows being created. Okay, and we see from the lows that I pointed out, we see displacement beneath a previous low, which creates a fair value gap, which is then retraded as price continues lower. Okay, my two levels of liquidity I was expecting is 3947 and 3912. Okay, and price reaches both of those levels as expected. Okay, the morning session obviously being very choppy because of two things. First, we had the 8:30 unemployment claims, which was I believe a medium impact news driver. We'll see here. Just make sure. Okay. Okay. Yeah, it was a medium impact news driver. And then we had the 9:30 equity open, which took out the previous day's high. All right. I only saw indication of what I would have liked to have seen, or how I would have liked to see price delivered. I only saw that later on in the session. Okay, but it happened. Even from here, just before I move on. Okay. One second. Okay, so that would have been a 25 bars, okay, or a 9. That's 9 handles. All right, and then if I would have taken it from, well, sorry, let me do this again. Sorry, it would have been 19 from the first entry. 19 from the first entry, held to that level of sell side. That would have been 54 handles or pips. 54 pips, okay? Pretty good. 20 to 50 pips. That's enough to, that would be enough to feed me for sure. I could definitely do with that, you know? And so the next thing I wanted to, just to move on from this, okay? The next thing I wanted to study is I wanted to study NFP. Yeah, I wanted to study NFP. And I also wanted to add some of ICT's tweets, or kind of what he says. So the first thing, ICT actually posted this on his Twitter. He said that NFP, non-farm payroll, is a day where it is more difficult, more fickle, more likely to frustrate you than pay you in low resistance liquidity runs, meaning that you're going to be met with high resistance. Now, is it low hanging fruit to trade on a day where you're not seeing low resistance liquidity runs? Is that considered low hanging fruit? I don't think so. But is it good to backtest to see how price delivers and to study these days, to study how the liquidity injection, works and kind of how it plays out? Well, I definitely think that's very beneficial. And I want to talk about what I viewed on the day. Okay? So, here we are. This is that candle that dipped into sell side. And we can also mention that the level that I said was tapped, 3912, from the previous day, right? Yes, it was tapped, but it wasn't. There was no real. The body didn't trade below. There was no real volume below that. Okay, it was literally just tapped. In fact, by the wick, we saw no real volume. So, is it? Oh, would it be right to expect the volume of the candle to trade into sell side? Well, it would be. And did we have the day prior? Did we have this very, pretty much no resistance, right? We had this very inefficient price delivery. Yes, we did have it. So could we have expected a price to even trade back to that inefficiency at least? We could have expected that for sure. Okay, but what I expected here, the very first thing, this is no different than what I was explaining. This is the London session here, indicated by this black line. Okay, this is the London session low. This is the London session high. Before I move forward, let me start on the 15-minute time frame so I can explain the levels of liquidity that I was expecting. Now, I don't really need to go back through this again, like the daily, because it's the same thing. I still have the same bias that price is going to those lows, and I still have the expectation of price delivering to the sell side to take the liquidity from the sell side. Okay? And that's pretty much it. Now, when we're looking here on the right side, we see the levels of liquidity that I was pointing out. Okay? The very first one being the lows of London session. Okay, this one it's a little earlier, but it's the same low that was pretty much created right here. Okay, I could have marked this low. Same thing, it's the previous low. It's just slightly before the London session. All right, and then the high of the London session was actually created here. Now, right at the end of the London session, that high was taken out. Okay, so, and we just see even that very rapid. Okay, all the way here to 8:30. Okay, now at 8:30 we had average hourly earnings. Okay, we had non-farm employment change and the unemployment rates. These were all high impact news drivers, and we have these relative equal highs here. Okay, and they are instantly taken, and we have this level of buy side liquidity that was created. But we have these relative equal highs. That buy side liquidity is taken. My overall bias is that we are continuing to expect lower prices. And so then we watch that happen. All right, now the only setup, sorry. Okay, I'm going to have to fix that in a second. The only setup or trade below an old low, so we have this low, which I'll analyze here in a minute, which is then retraded, and we see prices continue lower. Why was I looking for a sell opportunity? Well, it goes to my bias. Go back to my bias and relate to that as I'm expecting that we see lower prices. Okay. I see that trade with massive displacement below an old low, okay, creates an imbalance, which is retraded. The thing is that it does eventually retrade to this higher imbalance, and with that, that's something that we always expect, okay? Our entry would be at the lower fair value gap, but in this case, we would be expecting it to trade into that higher fair value gap. I feel like if I was trading this day, I would have preferred to enter at the higher fair value gap, just with the amount of liquidity. I wouldn't care to miss an opportunity, okay, on this if it were to happen. I just wouldn't care. I understand that, as he said, right? Well, let me read it again. It's more difficult, it's more fickle, okay? So if I missed out on an opportunity, that's fine. Would I want to be in drawdown from like here to here? Not necessarily. I mean, especially with my stop, I would feel more confident, sorry, with my stop being at this high because look, hold on, and this is something I'm looking at too actually. So let's see what I've been stopped out. Well, believe it or not, it's not even the dot. Okay, so it definitely Could have been stopped out here. If I would have had my stop exactly at the top of the imbalance. If I would have had it here at the candle that created the fair value gap, I wouldn't have been stopped out. Now, regardless, okay, we're just analyzing the day. We have that fair value gap that's retraded, okay? And after that, it continues to go lower. In this case, I'd be expecting it to reach for this previous low. And let's do more of our analysis now on those smaller time frames. I just wanted to point out very clearly those levels that I was referencing. Okay, so here we are, and now we can see a juicy quote from ICT. So, all right, here's the. Sorry, give me 1 second. Here's 8 o'clock. Had this moved wrong. Right, we're just gonna. Boom. Sorry, it's supposed to be at 8:30. 8:05. Let me move this. 8:30. Okay. Here's 8:30 open, indicated by this very back and forth candle. You can see how big that wick is. Okay. That's when we have these high impact events and drivers. Okay. So the first thing I notice is that we have this low that's created. See price trade higher, create these relative equal highs. It's a level of buy side. Okay. And those highs aren't retraded to. What we do see after it creates this relative equal highs is price trades below. Let me move that. It's driving me crazy. Price trades below that old low, okay, and eventually retrades. Now, on this 5-minute, do we see an opportunity? Like, do we see anything like we see a fair value gap here? Yeah, and it's retraded to, you know, later on, but we don't necessarily, you know, see an opportunity for an entry. And it's good to mention that the entry that I have marked, okay, it would have lasted, this is 5 minutes, so 5, 10, 15, 20 minutes. 20 minutes I would have been holding it to, okay, to this old low is where I would have been holding it, okay, and then after that, it trades back up, okay, it trades to this imbalance from the 5-minute, and then it continues lower. Now, what we really notice is that it's very back and forth. You know, we have this low created here, okay, but the actual volume of it doesn't take out this old low, okay, it just trades it, probably, well, yeah, probably just stopping everyone out, doing it's like a stop raid, you know. This would have been my target right here, this low, so that's why I have that target marked. Okay, price retrades to that imbalance, continues lower. Okay, we have these now relative equal lows created, so that's a level of sell side liquidity, and then price goes here to this fair value gap that I marked. And even though the wick is here, this is a fair value gap on a higher time frame. You're just gonna have to trust me. Now, what ICT says here, fair value gaps are, and this is when this is showing the exact time that he tweeted it. Okay, so at 11:20, sorry, he says fair value gaps are an entry point, a target, and a means to measure a shift in sentiment as price shifts from buy to sell programs or shifts from sell to buy programs. Okay, so what is he talking about? Or let's talk about like a shift in program. He tweeted this before it even happened, you guys. All right, we have these relative equal lows created. Okay, right before it even trades back, okay, to this inefficient price delivery or this fair value gap. Okay, that's when he tweets that. And what do we see? Well, after it takes it, okay, after it takes that liquidity out, boom, went from a buy program to a sell program, and it even goes all the way down here. 155 creates this new low. Okay, we have same thing here. Okay, we had this fair value gap that was created here. See it very much acting as resistance. Okay, and we're not worried about this because all of this price action is new. It's literally still forming. Okay, I'm not focused on any of that right now. I'm not forward testing. I'm looking at what's already happened, and I'm looking at the session. So that would have been my entry. there was something that he said which made me a little confused. Well, I guess he was just saying that pretty much before noon he said that concludes like his price study for the week. And personally, I feel like I should just well, let me do this real quick, okay? So pull out the ruler. All right. So oh, that's one thing. My ADHD ass. All right, hold on. Sorry. You go down to the 1 minute. I forgot I was still on the 5 minute. Trying to close everything off. So this was the entry. Wait, was it from here? Was it on the 2 minute? Hold on. I think I might have seen it on the 2 minute. Just want to make sure what I analyzed is correct. Oh yeah, it was. Okay. So this was the entry. We have that fair value gap or displacement below sell side. Okay, a fair value gap's created. It becomes retraded. This happens in the span of, this would have been like 4 minutes. Okay, after that, and then, as I mentioned, this is a very quick setup. But if I would have entered this, okay, we're looking at, sorry, to this low, we're looking at 20 handles. Okay, and draw down on the trade. Okay, let's see here. So that's not right. So the drawdown on the trade. Which market from here? Sorry. So we're looking at, if I would have gone into the entry that I outlined here, we're looking at a 1.25 drawdown, meaning if I would have lost the trade, okay, or sorry, like while I was in the trade, that's what I was looking at. Now, if I would have lost the trade, how much would I have lost? So here's the fair value gap, okay. You know, honestly, I wouldn't, if I got stopped out, it would have been fine. It would have been fine at 0.75. Look at this. If I would have just right above the volume candle, or the body of the candle, if I would put my stop loss, sorry. If I would have put my stop loss above that, I wouldn't have even lost a handle. Okay, so from an entry right here, okay, looking at a pip drawdown, we're looking at a loss of less than a pip, and we're looking at a gain of potentially 20 pips with my current bias. Okay, now this would have been very important that I put my stop loss, okay, at where I was expecting price to go. All right, because if not, then I'm just looking at price making the move and quickly retrading. So it's important to have a take profit. Is what's good to learn from this. You know, it's not. I feel it's gonna be a lot more peace of mind for me to just put it in. If I lose, I fucking lose. If I win on the trade, congratulations. You know, I want to make it really clear that I don't care to lose. And I'm just going to put that out there in the most genuine way possible. I know I'm going to lose money. Any business, you're going to lose money. Trading is going to become my business as I continue to develop. And I'm spending my Sunday doing this. One thing ICT was talking about was ditching the weekend lifestyle. And I'm pretty much doing that here. But I guess I have learned how to ramble from ICT. I'm definitely rambling a lot, but it's not a bad thing. You know, I'm just really excited about this, and I'm excited to just continue watching price and how it plays out. And you know, starting here on Monday, I'm gonna set some intentions for the week as far as what I want to achieve with trading. But yeah, that's really everything. You know, we analyzed 2 days here. We analyzed Thursday and Friday, so the video was a little longer. But these videos, if anyone is watching this, okay, these videos are all a record for me. I can look and see how far I've come back testing. It helps me. Okay, I know I talk like I'm explaining it to someone. It helps me to do that. It's a different kind of learning when you learn something and then you try to teach it. And I'm not trying to teach anyone, but when you learn something and apply it and then try to tell it, Okay, locks it in your brain that much more, and that's essentially what I'm working to accomplish here. And it's very good to just have the progress and look back. But yeah, with that, that's everything. I'm excited to take anyone who's watching this along in my journey, even though no one's probably here. But this is 45 minutes long, so I'm gonna cut it off. See you guys later. Peace.